morning, everyone, and welcome back to another week of Nexus Grain Market Updates. It is Tuesday morning, June 2 at 9:33 a.m. Let's get to the markets. See a little sell-off right now in the Board of Trade. We are at 398 to 405 across the terminals this morning at Nexus. That's down 4 pennies for a bushel of old crop corn. The price that I just quoted you is down about 30 to 35 cents depending on where we're going in the past 2 weeks. So we've seen a significant sell-off in old crop, new crop corn likewise. We are at 426 this morning. That's off 6 cents. That's down around 30 to 32 cents for a bushel of new crop corn. The phenomena that's occurring again today is, I'm going to get into the disappearance of corn. It appears that the market believes that we're seeing our carryout grow. I believe that we're seeing a 2.2 plus billion bushel carryout, and with that, the cost of carry is borne by one of three entities. The entity that I really want to talk about right now is the speculative community. We went out last night at 55% of the cost of carry was bore by the spec. Today that's widening out to around 57, maybe 58% once we get to the close. But we're picking up a couple of 2 or 3 cents right now depending on where the tick is falling. Soybeans, a little different matter, even though we're seeing a big sell-off. Soybeans are down 16 cents right now at 11.14. That's down 20 cents in the past 2 weeks. Bushel of new crop soybeans are down 10 cents at 11.07. That's down about 20 cents in the past 2 weeks. The soybean market is actually turning the bend a little bit. We're getting into, obviously, the June season. Ownership is fairly well understood that the commercials are certainly stretched out into July. Depending on where we're standing in the United States, there's a certain amount of bushels left to be purchased. We're going to see certain pockets in the U.S. Get a little thin with old crop soybeans, and certain basis levels take certain jumps. But by and large, I still believe we're looking at around a 340 million bushel soybean carryout when we get to harvest here in the fall of 2026. Export numbers. Talk a little bit about that. Disappearance. We shipped 68 million bushels of corn out of the country as of the 28th. That's right in the middle of the trade range of 55 to 79. We shipped 18 million bushels of soybeans. Again, that's right in the middle of that trade range of 14 to 22. Nothing real remarkable with that. As far as the pace goes, those numbers continue to shrink just a little bit. We are at 5% above pace right now. Last WASDE number that was penciled in was 3.3 billion bushels of corn export. We're on pace right now to ship about 3.46, something like that, 3.5 billion. That's what we're on pace right now. We're about 5% above pace with our corn export numbers. Soybeans, we're on pace to ship about 1.49 to 1.5. The last WASDE number was 1.53, which was penciled in. Puts us about 3% behind pace with our soybeans. So again, the elephant in the corner, China. We're getting pretty late in the season to really see any big business show up, and we're seeing sufficient amount of domestic disappearance, and by the way, other export buyers that the influence of China wasn't nearly as dramatic as what we perhaps earlier thought. All right, so that's really my comments about export. As far as what's going on fundamentally, I looked at the 6 to 10, 8 to 14. Both of those models are calling for above average, above normal temperatures in both those time frames. Maybe normal to above normal precipitation as we get out further into next week. The weather map, not particularly rainy. I've been all over the state. Certain spots are fairly wet, fairly saturated. Other spots look like they could need a drink. So we have quite a bit of variability here in Iowa. I have some maps if anybody wants to take a look at them. You just call myself or any one of us. We all have copies of that. The other disappearance that I want to do a little deeper dive into, yesterday being the first of the month, was what I used to call census crush and census disappearance of corn. That is another National Ag Statistics Service statement that comes out on the first of every month, publishes the amount of actual usage of soybeans and actual usage of corn here in the United States domestically. When I look at the number of soy that was removed, the first thing I want to tell you is that we're down April from March. We're down around 5.5% on our crush. That is all explained through summer shutdown season. Essentially, in plain words, what that means is that 1 out of every plant right now, on average, is shut down for maintenance. That's about what we need to make it through the course of the summer, which starts in the Mid-South. That starts in April and runs through about the end of August, perhaps the second week of September. But by then, we're getting into new crop, and everybody wants to have these places buttoned up and running. So yeah, we're going to see crush pretty well stable where it's at. Regarding crush, something happened yesterday that is of note regarding margins and the components of margins. A record was set again yesterday. A bushel of soybeans has soybean oil and soybean meal in it. Today, last night, a record of 54.7% of product value, that's the oil share of value, was set. That is a record. We've never been here before. I have a chart that I want to show you, chart number 1, which is the price relationship between soybean oil and petroleum crude oil, WTI. And those two numbers yesterday, and I have this thing indexed over the period of a couple of years, showing us maybe getting back to a little normal, or perhaps even setting a greater standard for soy oil, demanding a much greater premium on a per unit basis, per calorie, per BTU basis than petroleum. Very interesting phenomena. That's only taken about 10 trade days to really get this thing straightened out. When we seen petrol take off and run, it outran soy by a great pace. We've seen that thing back off considerably, and now we're back on track to establishing these highs that the market has been really looking for. All right. When we compare April of 26 to April of 25, we're experiencing an 8% greater disappearance domestically than the year before. That's all the expansion I've been talking about. It's happening right now, and we're going to see that occur. That's permanent, everyone. That is permanent capital that's been plowed into the agricultural economy. And if you think that's impressive, get ready, because right now, because of all the things I've already told you, crushing margins are at record levels, and because of that, that will influence capitalism to do what capitalism does and expand production. So be on the lookout for the next plant expansion, or perhaps even a greenfielding. All right, let's get over to ethanol a minute. April ethanol production, April ethanol usage of corn versus March was down 10%. Really the same phenomena goes on in that industry. We see some local shutdowns. We see some regional curtailment with mainly maintenance. When I look at the April of 26 versus April of 25, it's actually about steady. We used about 1% more soybeans and corn in April of 26 versus April of 25. So there's really nothing going on here that is anything to get particularly alarmed about. The other usage of corn month on month was off about 6%, 6 to 7%. So that's more or less in line with what the ethanol industry did. Also, I do want to add as a footnote, the margins in the ethanol business are absolutely tremendous right now. Again, it all goes back to the renewable fuel standard that we're enjoying right now, plus the 45Z tax credit. Chart number 2 is our July corn market. Again, last I pulled this, I was trading at 439. I'm calling 433 as the first support and 428 as the second support levels. not telling you this thing's falling out of the air like a rock, but if we do get down and test those levels, the market is due for a bounce. My suggestion is, as a strategy, have your pricing orders in at whatever level above that. When this thing bounces, it can occur in the evening when we're not watching the market. So we offer that as a free service. Put your offers in, we'll watch those for you, let you know electronically, and give you a telephone call the next day if that happens. New crop corn, really the same thing, the same shape. 466 was the last trade. I'm calling 458 first support, 450 is second support. And a couple of things, if you've just paid attention to the spreads, 439 versus 466. Again, that is our carry that's built into the market. Doesn't necessarily mean that the market is anticipating corn to be worth more later. It simply means that it costs a lot to get it to later, and that is the return on the ownership of corn. Right now, it's around 57% of the cost of carry is bore by the spec. That's really about it for today. I want to thank each and every one of you for your business. We do have some promotional events that are coming up in the future. In the near future, we're going to be getting the information out to all of you as far as where and when these promo events are occurring. We're all going to be there. We'd love to see you show up. Be great to have your presence. Meantime, be careful out there. We want to see you back. And thank you for your business. Goodbye now.